guys, today is December 3rd, 2020, and futures pointing to a slightly higher open, especially on NASDAQ. And the news is that weekly jobless claims are lower than expected, and that's good news. And also, Nancy Pelosi and Chuck Schumer agreed on a 900 billion stimulus bill as a starting point. So that's all good news, but rising coronavirus cases and hospitalization is bad news. But in general, Wall Street is bullish and looks like we're going higher today. But well, let's see what happens. So let's jump to SPY ETF for S&P 500, and let's see the chart. And looks like SPY to me is going higher. I mean, it's breaking out after the trending in the range for a month and having a W pattern. As I told you, it's a bullish pattern to me, and looks like it's trending higher. And I especially bullish on Nasdaq, and a lot of analysts that I see on CNBC are not, but I am, and looks like it's also breaking out. And I told you before that I expect stocks to go higher until the end of the year. Okay, so let's jump to stocks. Speaking of stocks, and before we do that, if you want to see my trades on a pretty much everyday basis, you can check out a link to my Patreon club in the description. Okay, so let's start with CRM. Okay, so CRM, as you know, reported earnings beat on top and bottom, $1.74 versus 75 cents expected. So huge beat and provided a good guidance. But and I had a piece on this yesterday, like 45 seconds piece on CRM, and my feeling on that. And I mean, the deal with Slack I thought was very good, and I thought the synergy between Slack and CRM will be beneficial to CRM, as CRM gets customers, Slack customers, and Slack gets CRM, and CRM can use Slack in their product offering. And I mean, some analysts were questioning the deal, and yes, it was expensive. Yes. It was overpaid for, but I still like the deal, and I think like Mark Benioff said, CRM and Mark Benioff can make 1 + 1 = 3. So I believe Mark Benioff and his ability to integrate Slack into their product offerings and into CRM. And I think it's a terrific buy, even though it's a higher pre-market today. After a drop of like $21 yesterday, I still think it's a buy, CRM. Okay, it's one of the cloud companies that's actually making money. It's a crown jewel of cloud companies. Okay, and I really don't understand it. I mean, people are buying like other cloud names that don't make money and will not make money in the next 3 years. But CRM is the company that you want to buy as a cloud service name. Okay, so that's it on CRM. Okay, so let's move on to HPE, which is Hewlett Packard Enterprise. And Hewlett Packard Enterprise reported earnings of 37 cents per share versus 34 cents expected. Revenue top as well. And to me, looks like the shares are breaking out. So I would be buying HPE here. Okay, so as you can see, it's 50-day moving average is about to cross 200-day moving average, and it's not overbought yet. So I think it's looking good. HPE. Okay, box. Okay, so Bucks shares were dropping recently after reporting stronger earnings, but the outlook was well below estimates. So I wouldn't touch Bucks at this point as one of the cloud names that's been, it's been and it might be in the penalty box for a while. So I would not be touching Bucks here, and I would be interested to buy Bucks in like under $15 generally, but not around $17 as it is right now. NetApp. NetApp shares were jumping and went on a big run after a company reported earnings that heavily beat estimates, but 32 cents. Revenue was higher as well, and it guided higher to upbeat Q3. But it's overbought right now, sitting in overbought territory, and there is a big gap right now that needs to be filled between $54, $55 and pretty much $58. So I'm not sure if I want to buy a NetApp right now, but as soon as it comes down to around like 56, 57 area, I would be interested to buy it. So a couple of points lower, I would be interested to buy NetApp. But in general, great earnings, and I'm very optimistic about this company. Okay, Palantir. Palantir. Okay, a lot of people are asking me about that, and people are very excited about this company's shares a higher pre-market, and it went on a big run, but it was taking a hit recently after Morgan Stanley downgraded the stock to underweight, citing an unsustainable stock valuation. So it's a software company getting contracts, and it was a great buy at $10, but 23, even $23. I mean, it went as high as $33.50, and now it dropped to $23. Yes, it had a big pullback, but I would still like to see it closer to $20 for me to establish a position in the stock. 23.5 where it's opening. I don't know if I want to. If I still want to get in. I think it's still too expensive for Palantir. Okay, Tesla. Okay, Tesla shares are jumping pre-market after Goldman Sachs upgrades Tesla from neutral to buy with $780 price target. I'm always amazed at these analysts. I mean, they were bashing Tesla and they were criticizing the stock price when Tesla was like trading after the split basis, like around like what $200-300. They were saying it's too high, too expensive, and it's ridiculous. The valuation is like more than the combined value of like Toyota, GM, Chrysler, Ford, all that. Okay, and finally they realized that when the stock price is like around like $600. Okay, so the market cap for Tesla is like around more than $500 billion. Okay, and I think it's going higher. I'm pretty sure it's going higher, and even though it's higher pre-market, I think it's going over $600. So I think Tesla is still a buy to me. Peloton. Okay, Peloton. Peloton shares were jumping after Needham raised its price target to $140 and said that we believe Peloton is continuing to benefit from an improved competitive position in 2021 versus pre-pandemic levels. I think after dropping from high as $140 to like low of 100 and now sitting at $113, I think Peloton is actually a buy. On the chart, it looks good to me. I mean, it's crossing, Magda is crossing here, and it's not overbought or anything. It's finally a buy to me. Okay, so Peloton, I would buy it. Workhorse. So Workhorse shares dropped on Tuesday after U.S. Postal Service has delayed its mail truck replacement contract, and Cohen analysts reiterated outperform rating on the stock and said that they're still expecting the stock, the company to get the contract at least partially. But the shares doesn't look too good to me. I mean, they're higher pre-market, but right now the Magda is crossing here, and I don't think it's looking that good to me. Zoom Video. So Zoom Video shares dropped 15% on earnings, but was recovering yesterday after the drop as investors digested the news. Actually, the earnings were fine. I mean, the earnings were very good, but the stock just ran into this earnings report. But I wouldn't buy it right now. I think it may drop more. I mean, it's right now it's sitting in a territory that I'm not sure if it's going to go up or down. So my suspicion that it has more room to go down. So I wouldn't buy the stock right now. Okay, Crowdstrike. Crowdstrike shares are a higher pre-market, and actually they reported a strong quarter, beating the top and bottom, and issued next quarter and next year guidance above estimates. And the shares are obviously higher, like 12% pre-market, and I think it's going higher actually. So I would be interested to buy Crowdstrike. I wouldn't buy it at the open, but let it rise and drop a little bit. But I would be interested to buy like Crowdstrike in like 157, 156 area. So interesting buy to me. OCTA. OCTA shares are also higher pre-market, and they also reported pretty good earnings, beating top and bottom, and giving upbeat guidance. And I think OCTA is also going higher. I would just let it open and like around 245. I think it's a terrific buy for OCTA. Speaking of cloud shares, SPLUNK. Oh boy, SPLUNK is struggling this morning, okay, dropping like 23% pre-market after reporting a very weak quarter and giving disappointing guidance, which was below estimates. And I wouldn't touch SPLUNK. I didn't like the report. I read the report, and I really didn't like it. And it looks like there are better names out there than SPLUNK, and I would let it drop further. I think it has more room to go down. Okay. Speaking of room to go down, Nikola. Nikola stock actually rebounded yesterday from a recent sell-off after GM decided not to take stake in this automaker. And as you know, they were planning to take a $2 billion stake in Nikola and have some collaboration. So they left the collaboration, and Nikola is going to use GM's parts and hardware, but no stake in Nikola shares. Also, lockup expiration was on December 1st, so 53 million shares, I think, became available. And it could have been more if management didn't decide to postpone like 135 million shares that could be sold till April. But still, 53 million shares available, and I don't think Nikola is looking good. It's higher pre-market, but I would just sell it. I would just sell it and run. Okay, sell and run. Snowflake reported earnings and reported the first report after the IPO. Actually reported wider than expected loss, but beats on revenue. I didn't think the earnings were so excited to buy Snowflake at this valuation. The valuation of Snowflake is insane, like around $80 billion. I really don't understand it, and I don't understand those analysts that raise the price for Snowflakes and just pouring gasoline into the fire. But the valuation of Snowflake is insane, in my opinion, and I wouldn't be buying the stock. Okay, that's it, guys. Don't forget to subscribe to my channel, click the like button, and I'll see you Monday.